So where is its equilibrium? Well, it's right here. And that's what this line is here
Mm,
for.
okay.
So now notice something. Now notice how price comes up above it. There's no close on the next bar. We saw the pullback after this close above the equilibrium of this one daily bar. Price comes up above this, right? And look what's happening. Price comes down and it just kind of doesn't close above it, right? So right here, this is kind of like you should be neutral at this point. And maybe you should start, scaling out of a short-term intraday position. You can certainly hold, but you have to determine where you're going to get out. We talked about that. But so I'm going to, by the way, the arrow is pointing out the close above equilibrium. Now notice the following day, we get a close, right? And then price expands away. So at this point, you're like, well, how come notice how it didn't pull back, right? There's no pullback below equilibrium.
Right.
See that?
Okay. It looks like it hit the equilibrium, but it didn't pull back below it.
Yeah, I mean, if I were to stretch it out like this, you can see we're off of it by probably a few pips.
Oh, okay. Yeah, okay. Yeah.
That's the nice thing I like about the ability to stretch. You can really kind of hone in on this, right? So there's the close. So it's like, so if you have a rule and you say, okay, if I see a close, so there's that if, right? Then I need to wait for price to come back below equilibrium, right? So if then, if I see a price pull back below equilibrium, then I take a trade, okay? With the stop where, you think, we can talk about stops and stuff as you go down to lower time frames. But notice this, price closed, price expands away, and notice how it comes up to the next. Now here, we've already utilized the equilibriums that I think are important here. Now, yes, there's going to be an equilibrium in this bar as well too, because it's a wide range bar. And we can roughly see that it's roughly right about there, right? And then notice how price closed above it here as well. So we see strength in the market, right? See, if you go back to my analysis on the XRP chart that I did yesterday, right? I'm essentially using the same exact concept even here in Forex, right? So we see strength in the marketplace. So, but notice how it comes up to the next one, right? So you got here's the next set right here, right? The next set of two, which if I could make a 2-day chart, this would all be one candle with this really, really big range. And you can see that equilibrium of that is right here. Now you see how it comes up to equilibrium. Buy stops sitting up here, right? There's going to be buy stops. There's going to be a distribution of anything accumulated lower up at old highs. And then here we are at the equilibrium. Well, what's happening now above this equilibrium? They're selling it. We're selling at an equilibrium because look, it's getting rejected.
Right.
And then look what it does. Comes all the way back, pulls back below our equilibrium.
The 3-bar equilibrium there. Yep.
For the lion's portion of the move.
Right.
That's the lion's portion right there.
Is that where you would typically look at getting into a position, is when it goes down to that, it just penetrates that equilibrium level where you have the blue arrow there, and then it closes above it?
Yeah, this would, so the thing that set this trade up was right here, was this close above the equilibrium. This is the retrace.
Right. That was like confirmation of some sort. There was confirmation that, hey, we're going to go into a potential bull run here.
So what you do is you make a note of this. Hey, we got to close above the WARB. Okay. Price expands away. Didn't pull back on the same time frame below equal. Didn't even pull back. So you're like, oh my goodness, we have a possibly big trade coming. And if you see it move into consolidation, this is a sort of, I guess you could say, a sort of reaccumulation, right? Yeah, there's some profit taking, but when you see price move back like this, right? And you see how these bodies just sit right there.
Right.
That's absolutely beautiful. I think you referred to that some years ago as checkerboarding, right?
Yep.
But this was a consolidated area sitting right now. Again, it's back to what we were talking about earlier. Why is it consolidating like this right here? Because this is an important equilibrium where price is going to be bought at a discount below this. This is where discount was at, and it's the equilibrium of these 3 down bars, right? So the close above it, price expands away, It will not close above this, right? So you're like, well, it didn't close above this, so how far is price going to go? Well, we can pretty much just trade up to that equilibrium, and then you can see we trade expand all the way up to, there's a close. Boom, right there, right? Then the very next day, it falls back below the equilibrium of these two right here. Boom, it's bought again, right? And so check it out. This is where we're at right now. So here's these three right here.
Mm-hmm.
Equilibrium of that is right here, okay? And that's what we essentially did. We came and consolidated below. So now it's kind of the opposite, right? We're consolidating below this. So does this mean that maybe we're going to start looking for a possible reversal? We don't know. But there was an awesome trade to be taken in here, okay? Just using the wide range bar concept. Let me get rid of this. But you can see, right? So just kind of recapping and going through, do you see the logic here? Close,
Right.
pull back below equilibrium, buy it, right? Price doesn't close. We want to wait for price to close above this. It pulls back again below it. It's another buy. See that?
Right.
So you could have, this is called a re-entry. You could have re-entered, right? Then it closes. And then you're like waiting for another re-entry. Well, it doesn't come back. Instead, it does this deal, comes down, and then there's the buy opportunity right there. Now, surely that's 1, 2, 3, 4, 5, 6, 7, 8. 8 days before the next good trade comes.
Right.
So there's a lot of time. There's no rush. There's no hurry, right? Yeah, you got to wait 8 days, and a lot can happen in 8 days. So that's why it's important to take notes and not get distracted. And
Right.
maybe try to stay off of the lower time frames. And then
So would you go down to the lower time frames to also look at those to refine your entry, or
Sure.
would you stick with a one out? Okay.
Yeah, sure, absolutely. Yeah, I would try to refine an entry, but seeing again the consolidation. Now, I haven't even talked about like what I look for in consolidations to determine if price is going to expand out of a consolidation in my favor. Expand either in a sell or a buy, and we can get into that here in just a bit. But so as price moved down, now this is going to be a bit more advanced now. What I'm going to talk about here,
Okay.
and I hope that you can understand it.
Okay.
Okay. So as price got up here, right? So if you're looking to continue buying in this current uptrend, right? So if we were to draw a line from the lows, we could see that we've got higher highs with higher lows. We're currently in an uptrend on the daily chart. So we could look for buys, okay? So now price comes up, right? We're now sitting below this one. Now look at this. It moves into consolidation, and then look at this wide range bar. Price comes down, right? And notice how it comes up above the equilibrium. So if you can see, I have it marked. Just this one wide range bar. You see how it comes up above the equilibrium? And every time it comes up there, it's not closing on the daily chart. Okay. Now look here. Price. There are people who are trying to get it. This is a perfect example of engineering liquidity for the buy side. What happens right here when price comes down and it stops and it begins to move up? You got people trying to buy this. Okay?
Right.
They're trying to buy in the uptrend. Okay, and they're probably looking at this and saying, "Oh, look at the resistance here. We have like a little bit of a resistance plane here. See how price is showing just a bit of resistance. It's not extremely clear, but you would say probably the resistance is going to be maybe down here, right? So you got people early trying to jump in this and buy a retrace, a continuation. Where are they going to put their stops? They're going to put them down at these lows, right? Because again, they see them as, hey, it's a double bottom, right, on a daily chart. So there's going to be sell stops sitting below there for anybody who tried to go long in this. But it's too early because price comes up again. If you don't have to get into this because we got that equilibrium sitting in the way there. Until we get a daily close above that equilibrium of this wide range bar, there's really no trade to be taken, right? And so you can see price falls back removes the buy stops, right? And then it begins to move up, hits the equilibrium again, kind of pulls back, right? Closes right here, right? And then the next day it opens up and it pulls down below. We have now price is moving up. Now look what it does. We wait for the close. There's the close right there, right? And look what happens. Price opens up above equilibrium, pulls back, they buy it. And now price is on its way. You see that the buy was actually right here at the blue arrow. That was the safest place to buy. You wouldn't be taking any buy opportunities on here or any long positions.
Because it didn't close above that equilibrium. And then once it did close above that equilibrium, you take the next
right
dip below that equilibrium.
Absolutely. And
gotcha.
so
wow. That is actually pretty exciting. I mean, that's very, very interesting analysis. I absolutely love it. I think you're absolutely spot on. It's how to spot the smart money in
right.
the market.
So again, we're it's just going back and saying where is, so now I'm using wide range bars, as you can see here, right? But you can see if I see a close above equilibrium, then I wait for a pullback and then I take a trade. And then look right here, you have resistance right here. You have these bodies, right? This is a good break of resistance and a retest. If we were to go down to a lower time frame, we would see that. And you know what this is right here? This trade right here is actually well over 100 pips. If we were to go down, we were to measure this roughly. So let's say you got in somewhere right here and you put your risk somewhere right here, right? So and you trade up to the next equilibrium. Look how many pips that is. That's 120 pips on a one lot trade, just a standard one lot trade, which a $20,000 account just trading 2% risk, right? You could do one lot trades all day long, right? 123 pips. That's roughly going to be somewhere around $1,000 plus, easily $1,000 plus off of that one trade, right? So yeah, I mean, it's not that difficult. You don't need a moving average. We don't even
yeah. I see a lot of traders trying to decide what moving average to use. Should they use a 20 period, a 50 period, a 200 period, a 100 period? I mean, there's just so much confusion with this. With the analysis, I mean, the way you outlined it, this is the first time I've really understood this system. And I think maybe because in your own mind, you've also refined exactly all of the elements of price action. And now you understand it so well that you've communicated, at least to me, in a very, very clear way. I understand it now. I think you've done, I think you always knew, I mean, you were, in my opinion, you were probably the smartest price action analyst I've ever met. I mean, you really got an incredibly good handle on this.
I appreciate that, Dave.
But you just explained it in a way that I really, really understood it. And I really appreciate that.
Oh, absolutely, man. And that's if you can understand it, that's the main thing. I mean, and if you can't explain something just in very simple, if you can't explain something in very simple language, you probably don't understand it yourself.
Yeah, that's absolutely true.
And I mean, it took some time to get to this,
oh, I'm sure. I can tell. I mean, this has, I mean, you've been studying this for a few years now, and I think you have got it. I mean, this is really amazing stuff. And I just appreciate that you sharing this with me so much.
Absolutely. And so let me go ahead and we'll go into some more advanced stuff. Now we're going to go to a different chart here. We're going to go to the pound JPY. Okay.